What is happening in the markets? The pace of change is insane, and if you're not plugged in, you're missing out on the biggest moves. We've got seismic shifts, unexpected strategies, and critical price points that could define the next chapter. Get ready, because the news cycle is absolutely red hot, and we're breaking down everything you need to know. First up, a Japanese nail salon is making waves with a staggering $3 billion Bitcoin acquisition strategy. This isn't just a small investment. We're talking about a massive play that could reshape corporate holdings. Next is the flagship cryptocurrency gearing up for a major price correction. We're diving deep into the technical signals and analyst predictions that suggest Bitcoin might be heading for a significant bottom. Could we be looking at a specific price point where the downward trend might finally reverse? Then, we're exploring the growing institutional confidence in Bitcoin, specifically looking at a massive purchase by BlackRock. What does this multi-million-dollar move mean for the everyday retail investor? We'll unpack the implications and what it signals for the broader market. And finally, we're navigating the complex world of crypto volatility with a look at the impact of significant Bitcoin and Ethereum options expiries. How do these events shake up the market, and what should you be watching out for? Stick around for all these updates and more. Don't forget to smash that like button, subscribe to the channel, and ring that notification bell so you never miss an update. A nail salon's billion-dollar Bitcoin bet. This is a story that sounds like it came straight out of a speculative fiction novel, but it's happening right now. A Japanese nail salon operator, Convano, has officially unveiled an audacious plan to acquire a staggering $3 billion worth of Bitcoin. This isn't just a minor investment. Convano aims to raise approximately $434 billion to purchase a massive 21,000 Bitcoin, which represents a significant 0.1% of the total Bitcoin supply. The company, listed on the Tokyo Stock Exchange, is making a bold declaration to become one of the world's largest corporate holders of Bitcoin. Teo Azuma, the director of Convano's BTC Holding Strategy Office, has laid out a meticulous three-phase acquisition plan with an initial target of accumulating 2,000 Bitcoin by the end of 2025. This aggressive accumulation is set to accelerate, with the portfolio expected to swell to 10,000 Bitcoin by August 2026. Azuma stated with conviction, "Our goal is clear. By March 2027, we aim to acquire 21,000 BTC and become one of the world's leading Bitcoin holding companies." This move is framed as a direct response to Japan's challenging economic landscape. A prolonged depreciation of the yen against the dollar has significantly increased operational costs for Convano, impacting wages and raw material expenses in their consumer services business. Azuma elaborated, "We started to think about Bitcoin because of persistent yen depreciation and geopolitical risks. Bitcoin is a long-term store of value. To date, Convano has already secured yen for $5 billion through corporate bonds and has successfully acquired 365 Bitcoin with these funds. The market has certainly taken notice, with Convano's stock price soaring. Shares have climbed an astonishing 223.27% in the past month and an eye-watering 1,414.68% year-to-date. Japan is rapidly emerging as an unexpected hub for Bitcoin accumulation, with other publicly listed companies like Metaplanet Inc., formerly a hotel operator, now holding nearly 19,000 Bitcoin, placing it among the top global holders. Reports indicate that 7 Japanese companies are now counted among the top 100 public firms holding Bitcoin. However, this strategy isn't without its skeptics. Experts like Matthew Sigel, Van Eck's head of digital assets research, caution that such Bitcoin treasury strategies are built on shaky ground, warning of rising risks that could erode shareholder value. He points out that while issuing new equity can generate premiums when stock prices significantly exceed Bitcoin net asset value, this dynamic reverses once stock prices approach parity, leading to dilution rather than capital formation. Glassnode's lead analyst, James Check, echoes these concerns, suggesting that the lifespan of corporate Bitcoin treasury strategies might be shorter than anticipated. He notes that while early adopters like MicroStrategy have established dominance, newer entrants face the challenge of differentiation. as investors increasingly seek unique value propositions beyond simply adding Bitcoin to a balance sheet. But how does Canvano view Bitcoin's notorious price volatility? We'll break down their counterintuitive take on market swings next. Bitcoin's price plunge, where will it stop? The cryptocurrency market is currently experiencing a significant downturn, with Bitcoin leading the charge downwards. Technical indicators are flashing bearish signals, confirming a loss of momentum for the flagship digital asset. In the past 24 hours alone, Bitcoin has seen a notable drop, falling from intraday highs near $111,420 to hover in the $108,000 range, leaving many investors anxious about how much further this correction might extend. Renowned crypto analyst Michael van de Poppe has weighed in, suggesting that Bitcoin's short-term trend is likely to remain bearish. He posits that the market is currently in a corrective phase and that this downward path could persist until the price reaches a potential bottoming out point around $103,000. Van de Poppe emphasizes that current market levels exhibit weakness, indicating that the correction phase is far from over. According to his analysis, for Bitcoin to signal an end to this corrective trend, it must decisively break above the critical resistance level of $112,000. This particular price point has proven to be a significant hurdle, with Bitcoin facing strong rejection here, underscoring the continued control exerted by sellers and posing a barrier to any immediate upward momentum. Adding another layer to the market dynamics, a significant Bitcoin whale has reportedly amassed an impressive $4 billion in profit over the last 48 hours. Such large-scale profit-taking activities can often impede a swift market rebound, potentially leading to weaker momentum even if a recovery begins, a scenario that aligns with Van de Poppe's observations. Despite the prevailing bearish sentiment, there's a glimmer of hope stemming from institutional demand. As of this reporting, Bitcoin is trading around $108,576, marking a 1.23% decline in the last 24 hours. However, trading volume has seen an uptick of 11.37% to $72.66 billion, indicating increased market activity despite the price drop. This sustained interest could be attributed to institutional players. Van Eck recently highlighted that numerous corporations have been actively increasing their Bitcoin holdings, adding approximately 638,617 BTC year-to-date. This figure represents a substantial five-fold increase compared to the total institutional accumulation in 2024, suggesting a strong underlying demand from major financial entities. While price action grabs headlines, what's the sentiment from the big players? We'll look at a major institutional move next. BlackRock's Bitcoin boost, what it means for you. Amidst the market's fluctuations, a significant development signals a growing institutional embrace of digital assets, particularly Bitcoin. BlackRock, the world's largest asset manager, has recently made a substantial purchase of Bitcoin, acquiring $24.6 million worth of the cryptocurrency. This move is more than just a large transaction. It's a powerful indicator of increasing confidence from major financial institutions in Bitcoin's potential as a store of value and an investment asset. For retail investors, this institutional validation carries significant weight. It suggests that the infrastructure and regulatory frameworks surrounding Bitcoin are maturing, making it more accessible and appealing to a broader range of investors, including large, traditional financial players. BlackRock's entry and substantial investment through its spot Bitcoin ETF have already contributed to increased liquidity and market stability. Their continued accumulation demonstrates a belief in Bitcoin's long-term prospects, potentially influencing market sentiment and encouraging further adoption by other institutional entities. This can lead to more predictable price movements and a more robust market overall, benefiting retail investors who may have previously been hesitant due to perceived volatility or lack of institutional backing. The implications extend beyond just price. The involvement of a titan like BlackRock lends a degree of legitimacy to the cryptocurrency space, potentially paving the way for wider acceptance and integration into traditional financial portfolios. As more institutions follow suit, the demand for Bitcoin could see a significant increase, potentially driving up its value and accessibility for everyone. It signals a paradigm shift where digital assets are increasingly being recognized not just as speculative ventures, but as integral components of a diversified investment strategy. This institutional confidence can also spur further innovation in the crypto ecosystem, leading to the development of new products and services that cater to both institutional and retail clients alike. But as big players enter, what happens when the derivatives markets get volatile? We're examining the impact of major options expiries next. Crypto options expiry, riding the volatility wave. The cryptocurrency market is a dynamic arena, and key events like options expiries can significantly influence price action and volatility. As August 2025 approaches, traders and investors are keenly watching the upcoming Bitcoin and Ethereum options expiries. These events represent contracts that give the buyer the right, but not the obligation, to buy or sell an underlying asset, in this case, Bitcoin or Ethereum, at a specific price on or before a certain date. When these contracts expire, they can lead to increased trading volume and potential price swings as market participants close out positions, roll over contracts, or exercise their options. The impact of these expiries on market volatility is a critical factor for all participants. For Bitcoin and Ethereum, the sheer volume of open interest in options contracts can create significant market pressure around the expiry dates. Traders often speculate on how these expiries will affect prices, leading to strategies designed to profit from or hedge against anticipated volatility. For instance, a large number of out-of-the-money call options expiring worthless might indicate a lack of upward momentum, while significant put options expiring could signal bearish sentiment or a potential floor. Retail investors need to be particularly aware of these events. While they might not be directly trading large volumes of options, the resulting market movements can significantly impact their holdings. Increased volatility around expiry dates can present both opportunities and risks. It's essential to understand that these events can cause temporary price dislocations or amplify existing trends. Therefore, having a clear strategy and risk management plan in place is crucial. This might involve adjusting portfolio allocations, setting stop-loss orders, or simply being prepared for potentially larger price swings in the days leading up to and following the expiry. Furthermore, the sophistication of options trading in the crypto market is growing, with more complex strategies being employed by both institutional and retail traders. The upcoming expiries are not just about individual contract settlements. They are indicators of market sentiment and expectations for future price movements. Monitoring these events can provide valuable insights into the market's collective outlook on Bitcoin and Ethereum, helping investors make more informed decisions in a rapidly evolving landscape. That's a wrap on our deep dives, but what were the biggest takeaways? Let's hit the highlights in our lightning round. All right, let's do a quick recap. We saw a Japanese nail salon planning a massive $3 billion Bitcoin acquisition. Analysts are pinpointing a potential bottom around $103,000 for Bitcoin. BlackRock is showing strong institutional confidence with a $24.6 million BTC purchase. And we've covered the impact of upcoming Bitcoin and Ethereum options expiries on market volatility. That's a lot of action. If you found this valuable, do us a huge favor. Hit that like button, subscribe to Bitcoin Bulletin for all your crypto updates, ring that notification bell so you never miss a beat, and let us know your thoughts in the comments below. You can also follow us on all our social media channels for even more real-time insights. Thanks for watching, and we'll see you in the next one.